Following IIT Delhi's receipt of a show-cause notice demanding 120 crore rupees in GST on research grants, a social media post comparing a news article sharing this with another report about the government granting an income tax exemption to the Patanjali Research Foundation is being shared widely. The post suggests a disparity, highlighting that the government appears to be offering incentives to a private research foundation while not extending similar benefits to a publicly funded educational institution. The Director General of GST Intelligence recently issued a show-cause notice to IIT Delhi demanding 120 crore rupees in GST on research grants received between 2017 and 2022. IIT Delhi is one of the several educational institutions across India that receive such notices. This development has sparked widespread outrage and criticism of the government. Reports indicate that the Ministry of Education has intervened and is discussing the issue with the Ministry of Finance. This development has faced criticism on social media, with people questioning the government's priorities and comparing it to the decision to grant income tax exemption to the Patanjali Research Foundation. However, this comparison is not entirely rational, as the Patanjali case involves income tax exemption while the IIT Delhi issue pertains to GST. In 2021, the Income Tax Department issued a notification granting a 5-year tax exemption to the Patanjali Research Foundation Trust by recognizing it as a research association. The exemption was granted under Clause 2 of subsection 1 of Section 35 of the Income Tax Act and the corresponding IT rules. As a result, donations to the Patanjali Research Foundation Trust are 100% exempt from income tax. Section 35 of the income tax pertains to deductions related to expenses on scientific research. It permits a deduction of 1.5 times the amount donated to a research association focused on scientific research or to a university, college, or other institution for use in scientific research. It is important to note that the aforementioned exemptions apply to the research activities of any institution recognized by the government. The government has extended such benefits to various scientific institutions, including universities and the IITs. Also, according to an IIT Delhi circular, scholarships granted to research fellows are exempt from income tax under Section 10(16) of the Income Tax Act 1961. This demonstrates that similar income tax exemptions are extended to institutions like IIT. As for the GST issue, under the GST Act, fees charged by educational institutions solely for providing education are subject to an NIL rate. Therefore, TDS is not applicable on GST when payments are made to IITs. However, other services provided by these institutions that involve an exchange of services are subject to GST. For instance, when IITs and IIMs charge fees from prospective employers for recruiting candidates through campus interviews, these services are liable for GST. Additionally, equipment purchased by research institutes is subject to GST. When GST was introduced, IITs and similar institutions paid 5% GST on equipment, but in 2022, the rate was increased to 18%. The current notice issued to IIT Delhi may be connected to this increase, since the funds allocated to research institutes are used to acquire such equipment. To sum up, as the government grants income tax exemptions to research institutions, including IITs, and it is not logical to compare income tax with GST, this post is misleading. Join our YouTube membership program and be a part of the journey of making public data meaningful. And remember, before you hit that forward button, pause.